Small and medium enterprises, or as we know them, SMEs, are engines of growth and development.
98% of the companies in Kenya are all SMEs.
Unfortunately, most of these enterprises are not able to operate to their optimum level due to the challenges they face.
The financial requirements when it comes to international aid is very, very high.
Most SMEs, the growth cannot really be propelled because they lack the capital.
We really have to support those SMEs so that they can play their role in fostering the African economy.
Welcome to the program. My name is Elijah Mwangi. Empowering SMEs. And that's the focus of our show today. We shall therefore delve into issues such as access to finance for SMEs. But first, let's have our fact sheet.
Today on our fact sheet, we break down the micro, small and medium enterprises. Under the Micro and Small Enterprises Act of 2012, micro enterprises have a maximum annual turnover of 500,000 Kenya shillings and employ less than 10 people. Small enterprises have between 500,000 and 5 million Kenya shillings annual turnover and employ 10 to 49 people. However, medium enterprises are not covered under the Act, but have been reported of consisting of enterprises with a turnover of between 5 million and 800 million Kenya shillings and employing 50 to 99 employees. Most SMEs fall under the informal sector, and by extension, the term informal refers to people in self-employment or small-scale industries.
98% of the companies in Kenya are all SMEs, employing maybe 30% of the populace in Kenya. And we have a lot of young people who are coming out of schools, the universities and the technical institutions, about 1 million every year. So can all these be employed? So what happens? We have to create opportunities for them to get to start their businesses and scale their businesses.
When it comes to supporting SMEs, African Guarantee Fund is one of the key financial institutions that promote economic development by providing guarantees to financial institutions specifically intended to support SMEs.
We go through the bank to make sure that they unlock the potential financing that they may have for the SME. In 6 years of operation, we've been able to issue $1 billion of guarantee, meaning we were able to unlock $2 billion of financing towards the SME. And we've done so through 100 plus financial institutions. And today in our portfolio, the number of SME that were able to benefit from those guarantees are more than 20,000 in 40 countries in Africa.
African Guarantee Fund, the portfolio that can be given that is unsecured would move from, oscillate from 50 to 75%. And of course, the good thing with that is that it also comes with a capacity building, a CD component that deals with capacity building. So it's not just giving you funds, but build your capacity to be able to develop some sort of resilience for the business moving forward.
For the fact sheet, my name is Alex Chamwada.
While Kenya's small and medium enterprises, SMEs, continue to create numerous jobs and boost the country's GDP, they face myriad of challenges that always hamper their growth, whether in manufacturing, distribution, agribusiness, or even in the energy sector. SMEs seems to be struggling with access to finance and credit, which makes them less competitive. Let's start by looking at the trend in the energy sector, a vital component in powering the Big Four agenda. Engineer Stephen Kigera is in the energy sector. He's the CEO of Empower Installation Contractors, which specializes in electrical power stations, distribution and transmission line construction. He's also the chairman of the Energy Sector Contractors Association. We meet him in Syokimau, supervising one of his projects.
We started in Mombasa as a subcontractor. It was in distribution lines, Mombasa and also in central Kenya. We managed to install about 150 kilometers of line. That was our major first job. Of course, after that we did a small job, because it's our major one, but we installed power to a church in, that's Mavuno in Mombasa Road. So it was one of the milestones because those are our first jobs with our first employees. Then we started now growing step by step as we get along as a subcontractor and also as the main contractor.
Empower Installation Contractors was one of the local companies that won one of the contracts worth 309 million for the upgrading of substations across the country back in 2015. I'm therefore keen to know how Engineer Kigera and the team managed the project considering they fall under medium enterprises category.
Due to the demand of finances, we really have to partner with the financial institutions. We come from the onset of the bidding, the bid boards. If you win, then of course you get into the other level of the performance. Because of the capital investment involved, we partnered for this particular project with the Credit Bank. That was in the year 2015. This project is worth about 350 million. So we had to get a performance board, which is normally 10% of that. So that's why we have to partner with other banks. Apart from the performance board, sometimes we want the working capital, time on and off, which we always go back to the bank, give us an overdraft to do the working. Then thereafter, we proceed with the job.
Yes, a partnership with a financial institution is definitely key for such a mega project, but as Engineer Kigera admits, it's never all rosy.
The major challenge here is cash flow. Cash flow means money in at any given time, and of course money back. But because of the slow process of projects, sometimes what you expect is not what you get, which means if you expect to do it in 1 year, you don't do it in 1 year, you do it in 2 years, 3 years, becomes a block to your operations.
Important to note is that in 2015, Kenya Power and Lighting Company gave contracts worth 3.2 billion to local contractors such as Empower, a move that was seen as a way of building local capacity as part of the Buy Kenyan, Build Kenya initiative, empowering SMEs, so to speak.
Mr. Chairman, I urge the board that by close of business on Monday, I would be able to file our submissions.
Now, fast forward to 2019. Kenya Power is on the spot after local contractors accused it of awarding a multi-billion tender to foreign firms at their expense. Several contractors under the Energy Sector Contractors Association are seeking to stop the award of a 6 billion Kenya shillings tender to construct power substation and transmission lines.
The only way is to empower and bring the works closer to the people. For the last 10, 15 years, we have developed the capacity, which is there already. All what we need is to be given an opportunity to execute the works. And the only way is to be able to zero in what is for Kenya, to be local, and what is for foreign. With that capacity, you'll be able to move forward. There is what we call domestic preference, which is applied in all other countries, whereby now you zero in onto your economy. But currently, everything is international. From the start, the financial requirements when it comes to international bidding is very, very high. And being a small country, then most of the time, we will not be able to meet those financial conditions. Given that the external firms internationally have got lower interest rates in terms of loans, some of them 2%, up to a maximum maybe 6%. Here in Kenya, we are developing, our interests are 18%. So even if you access the funds, you cannot compete with the same international.
Well, there are those that would argue that when local companies are given some of these jobs, they don't deliver. How would you respond to that?
That's just a narrative because, again, when the tenders are made so huge, then the capacity to do the execution is lower because of our economy. And that's why we are pushing for unbundling the projects so that instead of having one project in the whole country, you put it into lots, whereby many people come in, the risks are lower, and you are able to execute the projects, and we always succeed in that execution. There are many international firms who have come in, and they still fail because of that problem. But if it is well managed, it can be done.
From the opportunities of SMEs in Kenya to other issues that are critical when it comes to performance of local contractors. This time, we move from Syokimau to Murang'a County, where we find Catherine Kadhurima in the field. She's the founder of Gateway Clean Energy, which majors on power lines and survey work. And how did she manage to penetrate the highly competitive industry?
The epitome of this whole success story is when I won as the only woman a tender that was given on by African Development Bank, Kenya Power and Lighting and Ministry of Energy, which was worth 1.3 billion Kenyan shillings. So for me, that was a real success story, this project. I was a little bit disappointed when I started off because I approached a bank despite the fact that I have this LPO that I have won, I have the expertise that I have, but they will still not finance me. So what I've realized about financing is that it's not so much about you not being able to. It's about the financial institutions understanding the product.
But then, even when they understand the product, there is another issue, collateral. A headache to most SMEs.
How about women who don't have collaterals? Does that mean we don't get business? We are not able to run businesses? So I would want that to sort of like be looked into in terms of being considered from experience and what I can bring on the table.
So, how can financial institutions address this, aware of the patriarchal society that SMEs find themselves in?
So what we do as Credit Bank is to work with several partners, local and international. Some are risk participation partnerships to be able to come in and ameliorate on the risk profile. And also, in a way, really being able to de-risk the SME. And the way we do it as well is we look at the various players, in that business or the trade finance, the trade transaction. And we have a way of then assessing who is the counterparty here.
Well, those selected stories from some SMEs leads us to the next segment as we seek possible solutions to some of the challenges that SMEs are facing. Top among them, access to finance. Stay tuned. Welcome back to the program. In case you've just joined us, we're looking at empowering SMEs in the country. Time now to change the tone of our conversation from challenges to possible solutions. Most of the small and medium enterprises find themselves in a difficult situation since they constitute the missing middle, meaning they are considered too big for microfinance institutions or too small or risky for traditional finance providers such as commercial banks. The question of access to finance leads us to financial institutions that deal with SMEs. Betty Korir is the CEO of Credit Bank, a bank keen on SME banking. Interacting with SMEs, we have realized that there is a huge SME financing gap. What is the role that financial institution can play in bridging this gap?
So in bridging the gap, the role that we can play as banks or other financial institutions is really to come and be able to look at the SMEs as they sit today and be able to transition them. Of course, it's been said that most SMEs would die ordinarily within the first few years, less than 5 years, more or less, you know. So to ensure that this business is sustainable and it's viable moving forward, it's really to sit with the SME client and be able to walk them through even the financial numbers and the business sector as it pans across, because you'll then find that some business may have certain interdependencies, you know, interdependencies in the sense that one business may be dependent on the other one. So the question that you ask yourself is, for instance, assuming it's a manufacturing entity, what is the consistency in terms of, you know, supply of the material? What are the volume vis-a-vis the output? And then what level of output do you require to be able to generate certain revenues that are sustainable?
What would be your advice to that SME that is struggling with, you know, finances?
Assuming they've gone to several banks and they've been turned down, it's really to go back to the drawing board and figure out there must be certain aspects that is not right. So what we do for us is to find out what is not right, and we try and correct it and move forward. So first of all, you know, is the business viable? Is it sustainable? Because if the profits that you're going to make from your operations are going to be sustainable, then we should be able to lend you monies.
From financial institutions to the role that the government can play in supporting SMEs. Now, the Micro and Small Enterprise Authority is a state corporation with the principal mandate of supporting micro and small enterprises.
Right now, we're in the process of operationalizing the SME fund. In the past, the fund was not operational, and right now, the rules have been done. They are in the process of the public participation. At the moment that fund is operationalized, it's a fund that's basically customized for the SMEs, because the SMEs have their unique needs that cannot be met by other form of funding. First, they do not have the collaterals. Their business are not based by collaterals, and therefore we have come up with a customized fund that is able to finance the SMEs based on their needs.
And just in case you doubted the potential of micro, small and medium enterprises in the country,
we are saying this is a sector that provides 81.1% of employment in Kenya. That's translates to around 16.9 million Kenyans benefiting directly from the SMEs. So it's a huge chunk that provides a lot of employment in Kenya. And also to need to add that at the moment, there are 500,000 entrants into the job market every year. The formal market, the formal employment can only absorb 10% of those. So what will happen to the remaining? The remaining that are not absorbed by the formal market will obviously go to the informal sector. And therefore, the informal sector is going to grow and is going to be very big.
So, what is the future of SMEs in the country?
The future of micro and small enterprises is very bright. One, we are getting very energized young people entering into business. We are rolling out programs for capacity buildings. Opportunities are being created at the county level. Okay? Institutions are more responsive to SMEs issues. By establishing all these facilities, even the incubation centers, is going to really impact a lot of differences at the local level. And young people are also developing interest to do business. And then, as long as there's funding mechanism for the SME sector, it will be the game changer. Things will improve.
We're very excited about our eHub, which we started in 2016. A few challenges that we have seen and that we are trying to address before we even give financing to these entrepreneurs is the general business, day-to-day business running of the company, from their cash flows, their turnovers, their human resource, their marketing. So what the eHub does is teach all these things. Then when we are comfortable that the SMEs that we have and the entrepreneurs that we have are on board with us, with whatever knowledge we're impacting, then we give them money.
It's indeed a sector that requires more attention and a topic that calls for further discussion. But as we wrap up the show, we ask the SMEs experts, so to speak, what exactly do we need to work on in order to empower SMEs?
We need to definitely to improve the quality of infrastructure, because that is add-on on the cost of the SMEs. If to go from point A to point B, they have to spend so much in transportation, in storage. Definitely they cannot compete with SME in Asia and Europe. Access to energy. Energy is still very expensive in Africa. The legal environment. We need to make sure that we streamline all the processes, the procedure for SME when it comes to all the legal environment. And finally, access to finance. Finance is still very expensive in Africa. It's not just that it's expensive, sometimes it's not even available. So we need to make sure that finance is available at a better cost.
Well, very critical issues there that have to be fixed in the spirit of empowering SMEs. And that marks the end of our show. On behalf of the entire Chance Media team, thank you so much for watching. My name remains Elijah Mwangi, and see you again next time.